this is one of the best buying opportunities that we have seen in the entire history of Bitcoin. It's compatible to the beginning, 2016, 2011, 2013, 12 even, the beginning of the bull run.
Investment advisor and Bitcoin strategist Plan B talks about his prediction for Bitcoin in 2022. With the crash in the crypto market, his iconic stock-to-flow methodology, as well as the market cap peak for 2022, are among the Bitcoin analyst's current estimates for this year. Just 2 days ago, Plan B tweeted about the current market being a buying opportunity for Bitcoin, and on top of making his third purchase for Bitcoin earlier this month. According to Plan B, 2011, 2015, and 2019 were three of the greatest buying opportunities so far. Despite the fact that Bitcoin lost about half of its value during the meltdown that followed the November peak, its market cap has remained nearly unchanged. He says with fear and uncertainty in the market, it's no surprise that the crash we're seeing now and the increased interest rates are leading many investors to panic. This could signal that the holders of Bitcoin are really steering the price, and if the trend holds, Bitcoin could soon see another dip. Let's check out this interview with Plan B as he gives us his prediction on Bitcoin and what we can expect from the market this year. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
It always goes in waves, and when the price is high, then you're hot, and you're the man, the myth, the legend, and when the price is low, then you're the Plan to the scammer and what have you. So kind of get used to it. And of course, the big play we're seeing right now, and it's very interesting, is the arbitrage with the fiat world, because Bitcoin can be seen as a foreign exchange thing. So not even a tech stock or a commodity, but a like a currency. It has a interest rate, and you can exchange it with other currencies. So you can make very hard arbitrages there with enormous sums of money. And it wouldn't surprise me. Actually, I know that some traditional parties are doing that. And yeah. So I guess with all the central bank, as long as the central banks do crazy stuff, which they, in my view, have to do, because they've positioned themselves in a corner where they can't get out. They can't raise the interest rates because they will kill the stock market, bond market, real estate market, everything, the economy. Nobody wants to do that. So they're doing stupid stuff like printing money and more while saying they're tapering, which, well, I think is the only thing they can do. But that creates opportunities for arbitrage-minded people and just savvy investors.
On Thursday, Plan B retweeted a post from Sven Henrik that gave a detailed list of the Federal Reserve Bank's salaries and wrote that Bitcoin is managing debasement and inflation better and more cost efficiently than central banks. This comes on the heels of the recent multiple rate hikes by the Fed and adding $5 trillion to the balance sheet in the past 2 years alone, all while providing no explanation of how to recover the massive debt, making this look like it could be the worst year for investors since the Great Recession.
We are seeing things that we have never seen before. So we are in uncharted territory. Inflation, of course, all driving this. But there's a couple of things we have to see. The inflation is not caused by the narratives, by what the narratives of the mainstream media are telling us. The money printing that we have seen since 2008, basically the acceleration of money printing since the financial crisis, would have led to inflation regardless of what happened after it. We as investors, and especially Bitcoin investors, of course, know and have to keep the eyes on the prize. It's because of the money printing. And that's where the scary part is as well. So the big question now is, will the central banks and the governments get things under control by raising the interest rate? That's how they normally do it. And stop money printing? Well, of course not. I don't see them doing that, because that will crash everything of value, real estate, the stock market, bond markets, everything. And they will have to reduce spending, which they can't, because they need the money to fund, well, the military or some social program, or keeping banks alive, or keeping other companies alive. So I think they'll see it. It becomes very hard to to keep the inflation in tame, but to tame the inflation. So, but what the other scenario is, we get runaway inflation or maybe even hyperinflation, like we see in emerging markets, right? Venezuela, Zimbabwe, more and more, Turkey now, Argentina. It's unthinkable that we will have that in Europe or in the US even right now. I think there's nobody really of the institutional investors that thinks that's a possibility. But history has shown us that once every 70 or 100 years, there is this big hyperinflation or reset moment that is necessary to keep things going. So either the central banks or the governments get it under control, which they never had in the last 500 years, or some natural thing, some bad thing, some bit of a disaster will cause a big reset of everything, and then we'll have to start over again. And as an investor, of course, you have very little time to maneuver yourself in a position that you're not wiped out. So from all other perspectives, we are at the rock bottom. If we just extrapolate from what we know, a second or third El Salvador would really change the game. If El Salvador is a small country, would not be alone in Latin America, but Mexico, Brasilia, or Argentina would join them. That would make the case so much stronger and so much more difficult for the IMF to crush. So that's something I really watch. And then just normal demand from normal people that go through the institutions, people putting their pensions in Bitcoin, people buying Bitcoin themselves from an exchange. I see it all around me. There's a lot of people that think this is a good time to buy Bitcoin and they DCA in. Of course, you have to be very careful with that, but I see it around me. A lot more people are asking, hey, how do you set up a wallet? And I think that very small adoption is also very important, and that's what we're seeing. As more people invest in Bitcoin, that's just, and maybe on the institutional level, the arbitrage. I think adoption is one thing, mostly retail, but arbitrage, just getting those juicy cash and carry returns that are not so juicy at the moment, but volatility at the moment, it's something else every time. It's better than being in fixed income at the moment. It's better than minus 1% on your bank accounts or on your treasury accounts. And my worldview as an investor, as an ex-institutional investor, it's all about arbitrage. And in the beginning, of course, there was arbitrage in Bitcoin only with exchanges in Korea and exchanges in Europe and the US, and then catching the differences, which was an easy way to make money. And now the future, the cash and carry trade was of course a very easy way to make money, and everybody and his mother is doing it. So now that premium has gone down to like 5%, or what is it today, which is still better than in Europe. You're minus 1% on your bank account or something. Those parties are now in place. They have their funds. They're doing this trade, and this market is more efficient and bigger and stronger. So what's left is, for example, the volatility trade. That's one of the big things. You can still make 25% a year with covered call writing and capturing the insane volatilities that have lowered, by the way. But it's obvious for Bitcoiners that the trend in the price, the fact that it's better technology and it will win and it will be adopted over time, is larger than the volatility.
What do you think about Plan B's prediction for Bitcoin, as well as the stock and crypto markets leading into 2023? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.